Hello and welcome to Business Incorporated. I'm Temple Ashaju. Coming up on the show this afternoon, Malawi's economy to shrink by 1.9% in 2020. And South Africa's net foreign reserves rise to $50.5 billion in August. Ethiopian Airlines in rescue talks with South African Airways. Let's begin the show now with the markets intraday, where numbers in Africa, which were all in the green zone today. South Africa's JSE jumped some 0.80%, while Nigeria's main index rose marginally by 0.07%. Elsewhere in Egypt, the EGX 30 surged the most by 0.84%. And Kenya closed negative on Friday as we await latest data from that market. And in the Middle East, markets were mostly positive except the Abu Dhabi index, which declined by 0.33%, while Dubai's index surged the most by 0.56%. Now, Saudi Arabia's benchmark index was 0.44% higher at intraday, while the Qatari index was marginally higher by 0.02%. And a bit offshore now, European stocks were higher this morning as the markets look to record from consecutive losses fueled by the tech stocks, and we are seeing across that sector at the end of last week. Let's bring in Conrad Bisson from the Frankfurt Stock Exchange for updates on the European scene at this point. Hi, Conrad. Thank you for your time on the show. European financial markets have started the week on a positive note. Equity prices, we understand, are showing some resilience to the sell-offs, of course, that we saw at the US tech shares last week. But Conrad, what's more in the focus at this point in terms of the trading day we're seeing across the markets over there?
Well, Temple, what's driving share prices, equity prices here in Frankfurt is positive economic data from Germany. Industrial production has continued to rise during the month of July compared to June at a bit of a lower rate than in June, but still what's important for investors is the upwards trend in industrial production after the corona lockdown remains intact. What's also, positive for the market here is mergers and acquisitions activity in France. A €1 billion hostile takeover bid is underway by the utility Veolia for its competitor Suez. Also involved in this deal is the large French utility Engie, which owns a large chunk in Suez. On the in the banking sector of Spain, there's talk about a large merger of two banks, Caixa and Bankia. This has inspired the share prices of both companies significantly. And of course, it has, sparked resurfacing of mergers and acquisitions speculation for other banks as well. Here in Germany, for example, Commerzbank is a bank that might eventually become takeover target. All this combined has caused the German share index DAX to increase. Look at this. It's a nice upwards trend. This Monday alone, all of the previous week's losses in the German DAX have been made up.
Well, one thing we know is that M&As all over the world keep the questions of business existentiality solved. That's somewhere that we know that a lot of investors will keep their eyes fixed on. But Conrad, in London, the 8th round of Brexit negotiations resumes this week. Are we closer to some kind of a deal or chaos on one side?
We're not closer to a deal, which makes it very likely that a no-deal Brexit is eventually going to happen at the beginning of next year, which means that more and more companies here in Europe, on both sides of the channel, will have to prepare for trading according to WTO rules, which means tariffs on many products, many services, also a lot of paperwork on the borders. It's likely that the European Union, in terms of practical issues that are also important to the EU, the new rules will not be very strict, at least at the beginning. You know, whenever also the European Union's interests are at stake, it will try to, you know, choose a practical approach to making business with the UK. But it's also very, very clear that UK businesses that want access to the 500 million or so consumers of the European Common Market will not get this for free. They will have to make sure that they play according to the rules of the European Union. And it's very likely that we are still going to see a lot of discussion about this. It's a very contentious subject.
Right, let's talk about Nord Stream 2, which is the name of a Russian gas pipeline to Germany and has become the major object of controversies for political debates at this point. What else are we learning about this development, this brewing story?
Well, more and more policymakers here in Germany are linking the topic of the gas pipeline to this case of Alexei Navalny, the Russian opposition leader, who got poisoned with Novichok in Russia and then flown to Berlin, where he is in a hospital right now in a coma. You know, Russia is denying that this poisoning happened, but experts of the German military have found clear evidence that this that Novichok is involved. Of course, we don't know. Nobody knows who exactly poisoned Mr. Navalny, but German officials are saying that the Russian government at least is responsible to help find out what happened exactly and cooperate. This is not something that the Russian government is doing, and many, you know, policymakers here in Germany are saying, why would we make the gas business more easy for the Russians with this gas pipeline Nord Stream if they make life for us so difficult in terms of what happened to Mr. Navalny. This is the discussion happening right now, and you know, even politicians who for a long time have been in favor of supporting Nord Stream 2 are now saying maybe we should give it up, which would be costly for Germany, but maybe a price to pay.
That's certainly going to have some serious impact on the ties between Russia and Germany, and I bet you will keep your eyes fixed on that for us on the program. Thank you, Conrad, for your time on the program. Let's take a trip now to London, where Juliana is standing by to bring us up to speed with some developments in the United Kingdom. Juliana, good afternoon from Lagos.
Good afternoon, Temple, from London.
Great. Interesting. So the UK house prices hit a record high in August. And of course, the price of the average property, we understand, surged by 5.2% last month. Is this a clear sign that demand for property has risen since the lockdown started?
It is a clear sign, and this was first confirmed last week by the nationwide house price index. The average cost of a home in the UK is just shy of £245,000. I did a quick calculation, and that's the equivalent to about 125 million naira. And you can double that if you want to live in London. This is the strongest growth that we've seen since 2016 and represents 1.2% month-on-month growth. Now, economists and observers have been looking at these figures, and really it boils down to a couple of things. One is the temporary cut to stamp duty. The second is pent-up frustration. We know that so many thousands of property transactions were put in hold during the lockdown. The property market was the first actually to be opened by Boris Johnson back in May. And also as well, the work from home culture. A lot of people who have been Zooming and using video conference calls quite like the idea of having a big garden and a big kitchen in their background. So a lot of people have been moving out of London and been moving outside of the M25, where they've got much more for their money. But we know that this is likely to be unsustainable. We've been speaking about the immense amount of job cuts that are coming into this country. The furlough scheme will be coming to an end in about 8 weeks. So there will be less money to spend, which likely means in the medium term we're going to see a downfall on prices.
So, Juliana, the Pizza Express's creditors have also approved a restructuring deal which will see around 1,100 workers lose their jobs here again. While the CVA will allow Pizza Express to cut its rent bills and stop operating from 73 restaurants. Can you tell us more about this developing story?
Well, yeah, Pizza Express, they've actually been in the news before the pandemic. They have been struggling, like so many other restaurants have been struggling due to COVID-19, but they had a problem with footfall before that. The London high streets are completely saturated with lots of these casual dining restaurants, and it's very, very competitive. And of course, during the lockdown, many of them saw their businesses go down. And this is the issue that Pizza Express have been having, and these company voluntary arrangements are what many hospitality sectors have been getting themselves into. So before you go bust, you're able to sit with some outsiders who are able to tell you how you can restructure your business by saving jobs. Now, even though 1,100 jobs are expected to go, which sees the closing of 73 stores, Pizza Express say this actually means they were able to save 9,000 jobs. I believe they've got about 40,000 jobs in the UK and about 450 stores. It has been a challenging time, especially for the hospitality sector, because even though they've been able to use the furlough scheme, the fact that the Eat Out to Help Out was so successful and then it's just been ripped away from them is a real struggle. But this is seen as a success. I believe before the pandemic and during the pandemic, Pizza Express racked up debts to about £753 million. Under the CVA, it's been reduced to about £353 million. But of course, some jobs have gone. So the amount of jobs that we're losing in this pandemic keep growing. Today, 1,100 from Pizza Express.
They must have to develop some better means of reducing those debt exposure, actually. Juliana, thank you so much for your time on the program. I appreciate it.
Thank you.
Right, so let's move on now to more numbers. Asia Pacific, where we have markets mixed today as investors reacted to rising tech tensions between Washington and Beijing. Now, mainland Chinese stocks, we understand, were among the region's major markets of the day, with the Shanghai Composite down by 1.87%, while the Shenzhen component dropped by 2.729%. And Hong Kong's Hang Seng Index was 0.44% lower as of its final hour of trading. In Japan, the Nikkei 225 closed 0.5% lower, while the Topix Index shed 0.42% to end its intraday trading session. South Korea bucked the trend with the Kospi gaining 0.67%, while Australia's ASX 200 also closed 0.33% higher. And markets in the United States are closed today for the Labor Day holiday, which marks the traditional end of the peak summer demand season. Stocks closed lower by a second day on Friday after a wild session in which names that would benefit from the economy reopening tried to offset another steep decline in tech. The Dow Jones Industrial Average closed 159.42 points lower at 28,133.31, while the S&P 500 slid 0.81% to the 3,426.96, and the Nasdaq Composite fell 1.27% to 11,313.13. Now, Malawi's economy is expected to shrink 1.9% in 2020 due to instability caused by a presidential election rerun and the COVID-19 pandemic. According to the president, public debt had risen to $5.53 billion. That's 59% of gross domestic products. President Lazarus Chakwera adds that going forward, the success of Malawi's economy will not tolerate corruption and will not interfere in the affairs of institutions fighting corruption. Ethiopian Airlines is in talks over a possible involvement in the rescue of flagship carrier South African Airways. Now, the group CEO of Ethiopian Airlines says although discussions are still at the early stages, the rescue is part of a general overview of Pan-African cooperation in the aviation world between both airlines. We understand that South African Airways hasn't made profit since 2011 and has since been under a form of bankruptcy protection since late last year. Now, creditors have approved a restructuring plan, but the government needs to find at least 10 billion rand of funding for it to work. We'll bring you more stories across Africa when we return from this short break. Do stay with us. Great to have you back on the program. Thank you. So, South Africa's net foreign reserves rose to $50.5 billion in August, all the way from $48.11 billion in the month of July. Now, data released by the South African Reserve Bank shows gross reserves fell to $55.74 billion, all the way from $57.87 billion. Now, the forward position, which represents the central bank's unsettled or swap transactions, we know that also rose to $3.76 billion from $1.52 billion. And South African pharmaceutical and beauty products retailer Clicks has found itself in the middle of a national outrage for showing an ad on its website, which many consider offensive to the black people's hair. Militant opposition party, the Economic Freedom Fighters, have blockaded several outlets of Clicks, insisting the company's apology is not enough. They vow that the protest will continue till the retail group closes down for a week at least.
The protest stump is for what's been described as a racist advert, which went viral on Friday and caused national outrage. Despite Clicks Group issuing an apology, the Economic Freedom Fighters, an opposition party, went ahead with the planned protest at 6 venues of Clicks stores across South Africa. The EFF has warned that if Clicks doesn't close, their members will be picketing and shutting down all 880 Clicks stores across the country. The ad is for Unilever products flighted on a Clicks website, and the major outreach seems to be towards Clicks.
The advert was flighted by Clicks, and in their response to us, they agreed that it was flighted by them. So that thing of trying to divert us and saying, no, there was a third party and some racist boardroom dealings, we're not part of that. They are the one who put it on their social media pages, and they accepted that to us. So that's why we're dealing with them. They must go and deal with Unilever. If Unilever, they want to test us, tell them to put another advert themselves as Unilever on their social media pages. They will know us.
In a statement on Sunday evening, Clicks said that it planned to trade as normal on Monday and apologized for the campaign, calling it a mistake. The retail-led healthcare group employs approximately 15,347 people, in which nearly 80% are black people. Black women say they feel insulted by the advert.
I feel very offended because I've got like strictly natural hair. I don't relax my hair. I don't do anything to my hair. I've got natural, lovely, beautiful hair. Even under the weave, they're so nice and they're rich. It's not broken. It's not damaged. It's just rich.
For me as a woman, it's an insult because Clicks should not define how a black woman should look. It is not in their scope. They are supposed to give services to black people, whites, Indians, and coloreds. So they have insulted me as a woman. They have insulted us in terms of the black pride. They have taken away one of the aspects of what makes us black.
Clicks Group CEO Vikesh Ramsunda confirmed that hair company Tresemme South Africa were the suppliers of the image, while employees who worked on the advert within Clicks have been suspended. Unilever, which is the maker of the Tresemme shampoo brand, has also apologized on its website, but the offended are still having none of that, insisting that there is no place for racism or racist insinuations in today's South Africa.
Well, let's go over to Sudan, where the economy's recovery is the top priority at the moment. While the U.S. has deterred on ending sanctions, suffering has deepened. Now, COVID-19 has hammered Sudan's economy, which was already in tatters before the pandemic hit. And of course, that further delayed the transition to civilian rule. The country is experiencing widespread unemployment and the worst famine in recent history, while foreign debts and inflation have stymied attempts to jumpstart investments. Joining us via Skype to talk more about the Sudan economy is Matt Kindinga, a senior analyst for Sub-Saharan Africa at Dhaka Frontier. Hey, Matt. Thank you for joining us on the program. Let's go straight to the issues at hand. So we know that last week, the Sudanese government signed a peace deal with the Sudan Revolutionary Front. Given how long Sudan's region has been affected by conflicts over time, how significant is this MOU?
Right. Thanks for having me on the program. Yeah, so this agreement is actually very significant for Sudan, and this is because the peripheral regions of Sudan, especially in the south and the west of the country, have been affected by instability, quite severe instability and conflict for almost 2 decades. So this is a very positive development, in our opinion, here at Dhaka Frontier. It's a key step in towards rebuilding the stability of the country. It's very encouraging that the US, the UK, and Norway were involved in negotiating the peace agreement. And it really reflects the new transitional government's determination to normalize the security landscape in the country. But I would say that it's by no means a guaranteed, it's no means going to be an easy process. So Sudan is a very vast country. It has a very fraught history of conflict and instability, and many of the conditions of the agreement, which include things like incorporating the former rebels into the armed forces, will be quite a difficult thing to achieve, especially given the current economic crisis that you referred to in Sudan. So although we are quite optimistic, there are many steps that need to be achieved before the longer-term stability of the country is guaranteed.
Whichever way, there has to be some kind of a solution to this quagmire, basically. But we know that the government has declared a state of emergency following severe floods since Sudan was already enduring an economic crisis. But how much of a setback do these floods represent for the economy's outlook?
Yeah, so it's really significant that you mentioned the floods, because this couldn't really come at a worse time for Sudan. The Nile, as we know, reached its highest level in over 100 years, and this is happening when the country is battling, as we know, an economic crisis, which has been driven mainly by the loss of oil revenues following the secession of South Sudan. The economy has been in a really deep crisis for a long period of time, and it was one of the drivers of the coup last year. Now the floods will really set back the development of the agriculture sector. You know, as you mentioned, there's a potential famine in the region, and this will increase suffering of the population. And the fact is that the government really doesn't have the resources to provide the humanitarian relief that Sudan needs as a result of the floods and the difficult situation there. So it really is a major setback, and it couldn't really be coming at a worse time for the country.
So quickly, before I let you go, following the removal of the former President Omar al-Bashir in a coup last year, Sudan's new government has made significant progress in normalizing relations with key global players like the United States, the European Union, and of course, Israel. But how will all of these engender investments, and how exciting will businesses be for this? Because again, this is bringing them back on the international stage, eh?
Yeah, that's right. So this is really the most common question we get from our clients about Sudan is when can we start doing business again? Because it's a very big market. It's mainly underpenetrated by businesses. The government has made significant progress, as you said, in terms of normalizing relations with main global players. But the key stumbling block is that Sudan remains a state sponsor of terror, according to the United States State Department. And there is one condition now that Sudan needs to fulfill in order to be removed, and that is the payment of around about $330 million to victims of terror, which, and setting aside the merits and the arguments of this condition, this is something that Sudan is really going to struggle to afford. And this is a problem because until Sudan is removed from this list of state sponsors of terror, Insurance companies will not want to underwrite businesses that operate in Sudan, and banks won't want to transact with companies in Sudan. So that's a major hindrance for investors in Sudan for the foreseeable future.
So the high risk over there is something that they have to find a way to cut down. Well, Matt Kidinga, a senior analyst for Sub-Saharan Africa at Dhaka Frontier, thanks a great deal for your insights on the show this afternoon. I appreciate them. And on that note, we'll bring the show to a close at this point. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.